Hello, everyone. So in today's session, I'll be discussing one case law in the case of Indofood's International Finance Limited versus JP Morgan Chase Bank. So this particular case law is one of the first international tax cases on the concept of beneficial ownership. It is very important. The facts are a little complicated. So I have put in the facts, the structures on the slide. Let me take you through it. And in a subsequent video, I will separately be uploading a few other smaller case laws. Since this was a little longer case law, so I've just made one separate video for this. So now coming to the facts of this case in simple language, the brief facts are that Indofoods, an Indonesian company, wished to raise a loan for business purposes. So instead of raising the loan directly, which would have attracted a 20% withholding tax, it established a Mauritian subsidiary, which then issued the loan with JP Morgan acting as trustee for the bondholders. Now, interest paid from Indonesia to Mauritius benefited from the Indonesia-Mauritius tax treaty with a reduced withholding tax of 10%. Interest paid from Mauritius for the benefit of the bondholders was not subject to any withholding tax. Now, it's important to understand the terms of the arrangement with the Mauritius finance subsidiary. So we need to understand that an identical amount of money was borrowed by the Mauritian company as was then lent on to the Indonesian parent. Even the rate of interest on the loan to and from Mauritius was the same. The terms of the documentation provided for interest to be paid by the Indonesian parent to the Mauritian subsidiary on day one and from the Mauritian subsidiary to the trustee for the bondholders on day two. In fact, the court found out that as a matter of fact, on some instances, the interest was paid directly from the Indonesian parent to the trustee for the bondholders, missing out the Mauritian subsidiary. So the Court of Appeal, the terms of the loan documentation, according to the Court of Appeal, it precluded the Mauritian subsidiary from meeting its interest obligations to the bondholders from any source other than interest paid by its Indonesian parent. Thus, the Court of Appeal seems to have considered that both in practice and according to the documentation, the Mauritian subsidiary was effectively obliged to pay every dollar received from its Indonesian parent to the bondholders. None of the interest received could be retained by the Mauritian subsidiary. While this arrangement was on, the Indonesia-Mauritius tax treaty. So this is an important fact in this case. So the Indonesia-Mauritian tax treaty was terminated due to the tax evasion issues. Now, the termination of the treaty meant that the tax to be withheld on the interest from the Indonesia parent reverted to the normal domestic rate of 20%, since no benefit of 10% under the treaty is available. So this 10% rate, which was earlier available, is no longer available, right? Because the treaty stands cancelled. However, the loan documentation, it contained a provision that if the tax rate on the interest was increased, the payer had to gross up the amount paid so that net of the higher tax, the bondholders received the same return as previously. Now, the final crux of this case was that the Indonesian borrower said that there was no reasonable step it could take to maintain the low withholding tax, so it should be allowed to repay the loan early. However, on the other hand, JP Morgan, acting for the bondholders, said that there was a very reasonable step in their, as per their analysis, So they suggested that a new structure, which is shown on this side. So this particular structure should be looked at and entered into to retain the 10% beneficial rate of withholding tax, and they should not repay the loan early. So another fact which was also mentioned in this case law was that the rate of interest had increased. So that was another reason why the Indonesian company wanted to um, uh, enter into another loan agreement to receive a higher rate of interest. So essentially, the proposed structure was to interpose a Dutch entity between the this Dutch entity between the Indonesian company and the bondholders. So and to get a beneficial withholding tax rate of 10%. Now, two arguments were raised here to show that the proposed Dutch company would simply not work. First was that it would not be the beneficial owner of the interest, and second was that it would not be a resident of the Netherlands for tax treaty purposes. So if either of these could be shown to be correct, then the proposed Dutch company would simply not achieve the reduced withholding tax, and a measure which was kind of put up to fail could not be a reasonable measure to take. Technically, the question was whether the Dutch company would be entitled to the reduced withholding tax under the Indonesia-Netherlands tax treaty. So this was essentially a question of how the Indonesian revenue would respond to the Dutch company. Would they regard it as the beneficial owner or not? And if they rejected a treaty application, how would the Indonesian courts respond? Technically, therefore, the issue was one of Indonesian law and practice on the concept of beneficial ownership. Now, coming to the decision of the Court of Appeal. So this particular case, it was filed before the London High Court. So the taxpayer exercised its jurisdiction before the London High Court. The Court of Appeal unanimously considered that the proposed Dutch company would not be the beneficial owner of the interest. So this new company which was being suggested here, so the court held that this will not be the beneficial owner of the interest. So this meant that for the first time, an English court had to provide a definition of the term beneficial owner in a tax treaty. The Court of Appeal relied heavily on the commentary to the OECD Model Treaty. Paragraph 9 of the 2005 commentary on the interest article, which is Article 11, was discussed. So if you want, you can refer to paragraph 9 of Article 11 in the OECD Model Tax Convention side by side while listening to this video, and read through it. It will give you a lot of clarity. So it says, let me read it out. The requirement of beneficial ownership was introduced in paragraph 2 of Article 11 to clarify the meaning of the words paid to a resident. Okay, as they are used in paragraph 1 of the article. So it makes plain that the state of source is not obliged to give up taxing rights over interest income merely because that income was immediately received. By a resident of a state with which the state of source had concluded a convention. Now, the term beneficial owner is not used in a narrow technical sense. Rather, it should be understood in its context and in light of the object and purpose of the convention, including avoiding double taxation and the prevention of fiscal evasion and avoidance. So the Court of Appeal in this particular case effectively adopted what is said in this final sentence as introducing an international fiscal meaning of beneficial ownership in contrast to what it calls a narrow technical domestic law meaning. The court supported the view that under an international fiscal meaning, beneficial ownership is to be determined by reference to a test which requires that the recipient enjoy the full privilege to directly benefit from the income. It added that where recipients, as in the circumstances of this case, are bound in commercial and practical terms to pass on the income, they will not be the beneficial owner of the income. Accordingly, the Court of Appeal found unanimously for Indofood that if interposed, the new company could not be the beneficial owner of the interest received from the parent. The court also stated that the position of the issuer and new company equates to that of an administrator of the income. So finally, it was held that the Dutch SPV or the new company would be subject to a full withholding tax rate, and the beneficial rate of 10%, which is available for a beneficial owner, will not apply in this particular case. Thank you so much for listening to this video. If you have any questions, please feel free to reach out to me by way of an email or put in a comment in the YouTube comments section. And I will be uploading another video subsequently. So I will be discussing, I think, around 3 case laws in that. And we will also summarize all the key points coming out of our past 2 discussions. And if you want to listen to the concept of beneficial ownership, I have uploaded a video before this video on the concept of beneficial ownership. This is part 2 in the series of videos on beneficial ownership, in which I have looked at the case law of Indofoods. In the subsequent video, which will be part 3, I will look at a few more case laws, along with the pointers which summarize the concept of beneficial ownership. Thank you so much. See you soon.